Hi, and welcome to the Vet Story Podcast. This is the podcast where we talk about the business side of veterinary medicine. You know, the stuff they didn't teach you in school. We focus on what really moves the needle, from metrics, leadership, culture, and the decisions that makes running a practice easier. I'm your host, Reese Generelli. I am a multi-practice site owner and the founder of Innovative Veterinary Management Solutions. My purpose is simple: to help practice owners move from the business operator category to the business owners category. And with that, let's get started. And we are back with another episode of the Vet Story Podcast. I'm joined with Cameron Harkey from Bank of America. How you doing, buddy?
I'm great, Reese. Thank you so much for having me here. Yeah, life is good. The weather's starting to change a little bit.
For the listeners, Cameron, tell us a little bit about you. We know that you work at Bank of America. What states, what region, all the things that you do?
Yeah, that's a great question. And I think this is an important question. When it comes to lending and financing, people want to know who they're working with, right? They're putting a lot of investment and time into who they're working with. So they want to trust who they're working with. To give you an idea of who I am, my name is Cameron Harkey. I live in the west suburbs, part of Chicago, Illinois, and I do veterinary lending exclusively in the upper Midwest that consists of 7 states. I cover the northern half of Illinois, and then I have the entire states of Wisconsin, Minnesota, Nebraska, Iowa, North Dakota, South Dakota. So 7 states in total. As you can imagine, I do travel a little bit, but it's fantastic working with the Midwest folks. It's just, I couldn't ask for anything different.
Now, I understand that when people go to apply for a loan, what does the process look like? Now, should they find out what they are going to buy first or build first, or should they come to you and say, what does the loan look like? What comes first, the chicken or the egg?
That's another great question. So how I would answer that question is we have different product sets, right? It just depends on what the doctor is looking to do. Do they want to start up their own clinic de novo? Do they want to acquire an existing clinic? So there's different products they would have. In speaking to doctors, they've been thinking about this maybe since high school, since vet school. They've been thinking about this for a very long time. So hopefully by that time, they've identified, do they want to do the startup route? Do they want to do the acquisition route? I would say, depending on which route they want to go to get into ownership, the application is very simple. We kind of just dive into the loan approval. My conversation with doctors at the very beginning, that's kind of the pre-qualification. It gives me a good idea of where they're at in the process, and if there's anything that we can do to increase our chances of receiving a favorable loan decision, I can have that conversation at that time. So once we send out the application, it's not a daunting task. Tax returns may be an application. We try to really minimize the application process so we can go into underwriting quicker than later, right? So the chicken and the egg piece of it, we want to give the doctor a decision and just give them options. So then at that point, they can proceed how they feel is most relevant. Hopefully that answered your question, Reese.
Yeah. So I'm a doctor and I'm thinking about buying the practice that I currently work at. Do I have that conversation with them first? Do I come to you? How do I know how much I can borrow?
So our loans are based on cash flow.
Okay.
We want our doctors to be profitable. If we look at a buy-in, assuming that the doctor is associating there now, let's just say, I would advise that they have that conversation with the current owner first, because think about it. We have to gather not only the buyer's financial package, but we have to get financials of the selling clinic as well. If they haven't had that conversation with the owner, how are we going to get documentation of the selling clinic, right? So I'm a transparent person. I think communication is key, especially when it comes to financing healthcare loans. We can try to do it simultaneously, but at the very minimum, I would suggest that they have a conversation with the current owner and make sure they're on board. Because if we go through the entire loan process, let's say we get them an approval and they haven't had that conversation with the owner yet, things are going to stall. We're going to come across a dead end, right? So I like to have things seamless and all parties are on board, right?
All right, I'm going to throw a wrench at you. I'm working at a practice that's not doing well. I believe that I can turn it around. The owner's stuck in their old school ways, don't want to go paperless records. And I don't know. Let's just pretend that we're still doing x rays. This is bare bones. I love the location. In fact, the real estate's great if they're willing to sell it to me, but it's a no low practice. If anything, it's an asset sale. Can I still do this?
Yes, certainly. We can definitely take a look at it. I think it's worth a conversation, but again, it's case by case basis, but it's something that's not out of the norm.
Just want to make sure, like, if we're looking at legacy sales, there's still hope for the ones that aren't doing well, is what I'm trying to say. Now, do you prefer a de novo versus legacy sale, or it doesn't matter to you?
It doesn't matter to me. At the end of the day, if I can help the doctor achieve their goal, whatever it may be, that's all I'm in it for. So it doesn't matter to me.
Okay. I still have a student loan. I went to school for 4 years. It's, call it 200K, 300K. Does that exclude me from a loan? Talk to me about that.
So we understand that people oftentimes have student loans, but I want to debunk that myth. Just because someone has student loans doesn't automatically disqualify them from receiving financing.
So if I buy a practice tomorrow, can my practice pay for my student loan?
So their money is their money. After the financing, the transition happens, they're an owner. The earnings that they receive, they can pay their personal debt obligations, their personal bills, one of those being student loans.
Good.
We don't manage that piece of it.
Am I hearing you correctly that if someone purchases or becomes an owner, they have the financial stability to pay off their student loans quicker?
If that's what they want to do, then they can do that.
Because I think a lot of people believe that I have student loans, I can never afford this. But with the right practice, the right cash flow, we can certainly make it happen through normal distributions that are obviously applicable to the same taxes and all that kind of stuff. That's what it is, correct?
Correct. I would just preach leverage your cash the right way, whether that's, you wanting to pay down or pay off your student loans, so be it. But a message that I would say is leverage your cash because you never know when another opportunity might present itself, another clinic to purchase, the real estate to purchase. So just be mindful of that rather than thinking that you have to pay down your student loans. As a bank, we understand that most people do have student loans. So it's not a determining factor. Just because you have student loans doesn't mean you can't qualify for a practice loan. To answer your question, if they want to pay down their student loans because the clinic's profitable, which that is our hope, they can do so. Absolutely.
Now, if I want to buy the real estate, is that one loan? Is that different loans? How's that structured?
So it depends. If they are a current owner and they own the clinic and they're wanting to buy the real estate where their clinic is located, it would just be a real estate loan. So let's assume they're buying an existing clinic with the real estate. It would be two separate loans, one for the clinic acquisition and a separate one for the real estate purchase.
Okay. And so, they're treated two different ways. Is that correct?
Correct. So it's case by case basis, but in that situation, that'd be two separate loans.
All right. Hang on. Let me start throwing some more spanners for you. Let's say, okay, what support do you provide a brand new owner, never owned a business before? What does that look like? Do you have anything?
When it comes to like actual consulting of financials and how to run a clinic successfully, I lean on my resources. So I have outside people that are designated as, veterinary practice consultants. So I have those resources that, I can always introduce a doctor to just to lean on additional help.
Yeah.
I'm always one phone call away. So let's just say the transition happens in an acquisition, we close the loan. I don't disappear. I'm not a transactional banker. I'm in it for the long partnership. So if they have any questions, doctors, just call me. I'm one phone call away. But when it comes to looking at financials, doing reviews, stuff like that, I lean on the resources of the people that I know within the industry.
So you have a network of people that you prefer and refer out to?
I do. Throughout the Midwest, I've spent a large part of my time finding out who the people are within this vet industry, whether they are a consultant, CPA, attorney. Not only that, identifying who those individuals are, but I want my doctors to work with the best of those individuals within their space, whether it is an attorney.
Yeah.
You know, I might know 3 or 4 attorneys in Illinois that are heavily involved in veterinary clinics, but I want my doctors to work with who I think is the best one, best fit. So there's many other things that I'm looking for as far as a good fit, but that's my duty, is to just make the entire process seamless and a good experience for the doctors. And part
Okay.
of that is introducing them to the right people.
What's the one thing that you say to anybody? If you're going to do anything when it comes to practice ownership, remember to do this one or two things. Like, this is a must. You must not bypass these two things. What is it?
That's a good question. So, a conversation that I have a lot is, hey, doctor, whatever decisions you make, go with your heart and go with your gut, right? That's a common conversation that I'm having right now. If a doctor's like, should I do this now or should I wait? Interest rates or whatever it may be. The message that I say is, I would go with your heart. And if your heart is telling you to go with it right now, then do it. Because if you wait, you could be waiting 5 years, 10 years, who knows how long. So just go after it if you feel like now is the right time. If we are diving into more business specifics, I would say don't bite off too much than you can chew at the very beginning, right? Let's talk about a startup de novo. Maybe instead of starting up the clinic and also buying the real estate all at once, maybe just start the clinic, get the doors open, start seeing patients, and then at that point, maybe entertain buying the real estate. The clinic is what helps support any real estate loan or any other loans, right? You want to make sure that the clinic is moving in the right direction. You have a good foundation within the community where the clinic is located. So those would be my 2 words of advice for a doctor right off the bat.
What are the pitfalls that you would see that most people fall into, the common mistakes that people do?
I would say thinking about the student loan aspect, thinking that you have to pay off your entire student loan balance before you can qualify for a loan. And that happens quite a bit. And I have those conversations with the doctor. Keep your cash, obviously pay the monthly payment, so it doesn't go into default, but you don't have to pay off your student loans. Lower the student loan balance, it obviously helps, right? But that's not something that we will need or require, right? We just have to minimize expenses to give us a good chance on receiving a favorable loan decision. Our loans are based on cash flow, so we look at expenses, personal, business. So the lower the expenses will help our net profit or cash flow.
How many people do you see that don't have support around them, like support for business side, support for HR, accounting, will have the business acumen to support their venture?
I have a good amount of conversations with those doctors, those individuals who don't have that additional help, whether it's a family relative or a spouse, to really help them on the business side of things. So that's where I really don't mind helping these doctors, educate them on that side of it. But again, I can't help them run a clinic. I can only give them advice. And, if I don't feel comfortable advising them on something, I'll tell them. That's one thing about me, is I just want to steer these doctors in the right direction so they can ensure success.
Do you feel that adds some bit more anxiety to the decision?
Absolutely. Going back to what I said earlier, sometimes people ask me, is now the right time? And that's when I had that conversation, go with your
Mm,
heart, because if you wait, you could be waiting 5 years, 10 years. If you feel like that now is the right time, then go after it.
yeah, I understand that. I agree. So, what can you tell me about the banking side of things? Something that we don't normally see on a day to day. What goes behind closed doors? What is it that we
There's a
should
lot of
be?
reasons.
What is it that we should be aware of?
There's a lot of people involved on loans. I have a counterpart that helps me on the inside. He helps me collect financial packages, go through underwriting, helps all the way through closing. But there's several more people. For example, we have project consultants when it comes to project related loans. So startups or expansions, anything project related, we have a project consultant. So every person that comes into a loan is just here to help and streamline the entire process. Let's face it, doctors are extremely busy, working all day, maybe into the night. And then even when they're not working, they might have a family, right? So we understand that. So there's a lot that goes into these loans that the doctor will never see. And that's designed, right? We want it to be easy for them,
Yeah.
and we don't want to make them worry or feel any sort of anxiety along the way. We just want them to go from A to Z in the easiest fashion possible.
So it's like a done for you.
Correct. Yeah. Tough question. I mean, there's a lot that goes into it. It's not just getting the financial package and then submitting it to underwriting right away. We fully develop the deals. We understand the clinic, that if it's an acquisition, we try to understand the clinic, how it operates, the staff as much as possible. The better we understand both the doctor and then possibly the clinic that they're buying, the better chances of an approval and the better chances of that doctor's success.
So, is there a difference between banks and their rates? I'm just going to speak on behalf of everybody, I guess. We see rates on a service level. We see this person offers 7%, this person offers 8% or 7.5. Let's just say, and again, you don't have to agree with me, but you give me a 7.3% interest rate, and I go to the guy down the road and they give me a 7.2. How do I know the difference between the two? For me, it's 1 point difference. But to you, are you seeing something different on the back end that I'm not aware of?
I think you hit the nail on the head. It is surface level. There's so much more involved with a loan. If we're offering a certain interest rate and the next bank is offering a lower rate, as a consumer, as a doctor, I would want to know why. I don't mind looking at all the details and comparing apples to apples. That way, educating the doctor so they can make the right decision. If it is the next bank with the lower interest rate and we've looked at everything possible, then sure, doctor, go with that bank. But we want to earn their business. So I just want to give all the facts to the doctor so they can make the best decision possible. So I know that you're in this vet space, you own a couple of clinics, right? I would want to know, based on other owners, other people that are wanting to get into ownership, what are some roadblocks that you see or that you hear about people trying to get into ownership?
The roadblocks that we see often is they don't want the responsibility. And that's as simple as that. It is, I get paid, I come to do my job, and I go home. There's no responsibility, no stress. I get to live my life, and I don't have to come in on a Saturday if I don't want to because I'm an associate. So when we talk to associates and we talk about ownership, they know because they see the stress that owners go through. And for the most part, it's true. Ownership on any business is not meant to be easy. I mean, it is a roller coaster ride, but do you think having kids is easy? Most of the time, you want to strangle them, but it takes time to nurture, to build, to let it grow, to watch it grow. This becomes a different level of ownership, a different level of your why. Sometimes we just want to create a practice within a neighborhood that does something differently or better, whatever that may be. But as long as we understand what that reason is, we can build towards it. For me, we're fear free certified in our area. There's no one who's fear free certified in our area, but that's our why. We serve anxious pets. What else do I build towards? My practices run by themselves. I don't work in them. It's autonomy. So I'm able to do this. So I go in usually maybe once a week, if that, and I go in and on my team. I love to joke with them. I love to go, hey, how was your weekend? How was your marathon? I don't do much. I lead, I mentor, but that is really it for me. Now, I'm not a doctor. My wife is a doctor. And you might think, oh, that makes it easier. Sure, we've got a team, but my wife doesn't consult either. She goes in, mentors, walks out, and spends the bit of time with our kids, with our family. So we all need to have a why. For me, I love business. I love all types of business, but I'm unique. My wife hates it. I love business and I'll do business every day. For her why, our kids. And that is just why we do what we do. Will we sell one day? Of course. We're not going to be business owners forever. What, when, and who that looks like, no idea. Do we have a different life? Of course. We're always making sure that the business is running, but we have a team that does it for us. So my advice to anybody who's looking to ownership, if you want to be a one-man show, go ahead and do it. Just know what a one-man show can do. know its limitations. You want to build something different, have a team around you that can support you. I have that team. That is what I try to tell everybody who's looking at ownership, and why they think no, they don't want to do ownership, because they don't want the responsibility. And it's not for everybody. That I understand. But you still can own a business and give the responsibility to somebody else. Just a matter of how and what that looks like.
The common thing that we hear is having a good staff, right? Having a good staff, a good team is so important to the success of the clinic, right? So when you were transitioning into owning your own clinics for the very first time, how did you approach finding the right people, the right staff to overcome a lot of challenges that some clinics see?
Wow, that's a different topic for another day. It took a life lesson that I'll never forget, that I still teach to this day, for me to go, that is not the way we do business. And I had to fix that. But that is definitely a conversation that we can have another day at a bar.
Yeah.
Where we can laugh about it. But it definitely was a life lesson that I still talk about today. But it's just a far different conversation that we can solve in or talk about in 5 minutes.
It's case by case basis. I mean, what if it's a clinic that's, in a rural part of the country, right?
Yeah.
Where they can't find doctors. I get
Every
it.
practice will have its own unique problems.
Yes.
Unique problems. And that is just a fact of life in any business. But understanding what it needs, understanding what the future can hold, and the proper planning can help alleviate most of those problems.
Last question for you, Reese, before we have to wrap up. I think we have a couple minutes here. Last question is, what are some things that people are looking for in financing? Is it just getting the best interest rate, getting a loan approval, having that support system? What exactly do you think is most important when a doctor is looking for financing?
For me, it's very easy, because it's the same thing I hear in all the forums. Someone who is transparent, someone who is competitive, and someone who listens. Actually, there's 4. And someone can hold my hand. That's what everyone wants. Transparency, competitive, hold my hand, and listens to me. We feel like it's simple, but it's the 4 things that everyone wants.
I understand. Sometimes I have to put myself in the shoes of them as a consumer. And those 4 things you just mentioned are 4 things that I would want, 4 things that I would tell a family relative to look for as well. So I think those are all super important. And I try to conduct my business the same way.
That's good to hear. Cameron, where can people find you, buddy?
So I have a LinkedIn. I don't use social media a whole lot. I'm getting better, Reese. But I have a LinkedIn. I try to share pictures and what I'm up to on LinkedIn. But that's the best platform you can find me on, aside from giving me a call or sending me an email. My LinkedIn is, I believe it's Cameron Harkey, MBA. Friends request me on LinkedIn, I'll accept. Just here really to help support veterinarians across the Midwest and beyond. This is something that I'm passionate about, and I'll be doing this for a very long time, Reese.
Nice. We'll put your information in the show notes anyway, so people can check you out. Cameron, thank you so much for joining me today. Really appreciate it. I look forward to chatting to you again.
Likewise. Thank you so much, Reese.
Thanks, bud. Take care
Talk
now.
soon. All right. Bye.
And thanks for joining me on the Vet Story Podcast. If you found this episode helpful, please make sure you like and subscribe so you don't miss future episodes. If you want to come on the show to share your story or knowledge, email me, Rhys, RHYS, at ivmsolutions.org. This podcast is brought to you by IVMS, Innovative Veterinary Management Solutions. If you're a private practice owner or manager and find that the wheels are spinning with little to no direction or profits, or even if your culture is struggling, give me a shout. This is exactly what I help practices fix. I even offer the only money-back guarantee that exists in our industry today. Practice ownership should not be this hard. Visit ivmsolutions.org to learn more. Until next time, take care.